There's this one thing that most traders ignore these days, and it's the fact that the market, whether it's a crypto market, forex market, stock market, whatever, is ranging at least 90% of the time. So where all traders are always trying to catch the breakout or catch the breakdown of price before it starts impulsing towards the upside or downside, actually what the market is doing is ranging 90% of the time, and sometimes even more. So as a trader, what we have to do is trade the range until it breaks. But many of you guys have been asking me if they can also be trading range breakouts. And there is a model out there that if it presents itself, you can actually trade the range breakout without getting wrecked like 99% of traders do.
So it's 90% boredom and 10% heartbreak.
Yeah, basically, if you don't know what you're doing.
Dites-moi d'où il vient, enfin je saurai où je vais. Maman dit que lorsqu'on cherche bien, on finit toujours par trouver. Elle dit qu'il n'est jamais très loin, qu'il part très souvent travailler. Maman dit travailler c'est bien, bien mieux qu'être mal accompagné.
Here's the paradox. The breakout candle that you are longing, 99% of the time, it turns out to be a trap. And every single time you enter that position, and the majority of the market enters that breakout position, all the people need a low to cover their stop. Or when they are trading a breakdown, obviously they need a high to cover their stop loss. Those highs and lows, back within the range, are often being used as liquidity for smart money to then fill their orders. So what does smart money do? They push the price back inside of the range after the first breakout turns out to be a fake out, to then mitigate the liquidity pool and later on actually let the price break out. This is exactly what most breakouts look like. You open a door, you think you enter a new room, everything looks promising, but price returns exactly back inside of the same range where it was trading before that as well already. So I'm using this illusion to explain to you guys that you should not be trading those range breakouts unless you get the exact perfect confirmations.
But breakouts are where the big profits are made, right?
Yes, definitely. And I'm not saying that we shouldn't be trading breakouts. There is actually a model, as I said before, how we can trade those range breakouts. But I think I would need the whiteboard to explain to you how we can utilize that model to position ourselves in those breakouts and to make those profits. Okay, so one thing we always know is that ranges always occur after an impulse up or after an impulse down, because smart money needs to reaccumulate or redistribute. Now what most people do is that if price then starts trading inside of this range over here, as soon as it breaks out, they start buying Bitcoin or whatever asset over here, because they think, okay, the range is breaking out, we're gonna get the next leg towards the upside. This is not what we want to do, okay? This is where most people get trapped, because as soon as people open up those breakout long positions over here, every single buy and long position that is being opened over here, they need a low to cover their stop loss of their position, right? So what low will they be using? They will be using this internal low right over here that is back inside of the range. So where usually we would like to trade the potential deviation above the range high over here upon bearish confirmations towards the downside. Now let's say we do indeed anticipate a potential lag higher. So that 10% of the time where we potentially do get that range breakout, we want to make sure that we position ourselves. But we do not want to get caught in the breakout trade. So what do we do instead? We know that those range breakout longs over here place their stop loss beneath this low right over here. So we wait for price to then fall back inside of the range and take out that sell side liquidity. Because now once those long positions that opened over here are getting stopped out, we can then use the stops of those longs to fill our own bigger buy-ins and long orders. If we dive into the mind of smart money, of course, because my orders are not that big, but you understand what I'm trying to say. So once this sell side liquidity back inside of the range is getting taken out, and my bias is high time frame bullish, so at some point I am expecting that next leg towards the upside, only now I'm going to be interested in potential range breakout plays. But I'm not going to position myself when the price is breaking out at first. Now I'm waiting for price to mitigate that sell side liquidity pool. And then I'm looking for either local confirmations over here. So if I get a local high probability reversal structure over here, I'm going to position myself long right here with my invalidation over here, anticipating a potential range breakout to happen like this. Or I can wait for price to reclaim that range high one more time over here and then position myself up on the pullback over here, up on that retest of that range high. Because the first breakout is often a fake out. But if after that first fake out we take out sells liquidity over here and price reclaims that range high for the second time, then we might actually be breaking out. As long, obviously, if it aligns with our high time frame bias. Do you understand what I'm trying to say?
Yeah, I kind of do, but I think it's better to do it on a chart as well.
All right, let's get a chart going then. Right here we have a beautiful example on Chainlink, which played out to a T with the exact range breaker model that we are talking about. And as you guys can see, we are looking at a beautiful range with a range high right over here and a range low over here, which saw one bigger deviation being followed up by a second smaller deviation. Now my bias over here on Chainlink was bullish, and what we can see is the price indeed was breaking out of the range over here, saw a perfect retest and then pushed up once again. But we know that the first original breakout that was happening right over here on the chart of Chainlink, we cannot trust. In order to play a potential sustainable breakout of this range, we would like to see a pushback inside of the range to seek for some of this build up sells liquidity over here, and then we would like to see another breakout outside of the range to get long on Chainlink. Now if we indeed play the chart, and guys, I'm so sorry for the replay mode, but later on I will also provide you guys with a real-time example on Chainlink that you guys can use after watching this video, which is currently playing out. But we can see that indeed Chainlink went back inside of the range right over here, and it started seeking for that sells liquidity. Now once it started seeking for this sells liquidity right over here, and also the sells liquidity right over here, this is where I became interested for a potential long, anticipating the potential range breakout to happen. Now you don't want price obviously to fall back too low inside of the range, because the lower it falls, the more energy it will take for price to push back outside of the range, obviously. Now what we can see is if I then move and navigate towards a lower time frame on Chainlink, the first original setup that we could have taken was already happening quite soon, because as soon as price shifted structure back towards the upside right over here, we could have already anticipated the potential range breakout model to occur. This is the first setup that you could have taken targeting higher levels, right? Because we have that reversal structure, that high probability reversal structure, and we can then anticipate this bullish reclaim to happen as long as it aligns with our high time frame bullish bias. So let's now remove this setup and see if we got another trigger and potential execution coming as well for the price of Chainlink. We can indeed see it retested at range high and eventually broke out above that range high. And now once price broke out above that range high in confluence with the mark structure break over here, we could have also played it upon the retest of the mark structure break over here with our invalidation over here and add a second long position to that already existing long position on the price of Chainlink. Now looking at this major range, you can for example use the standard deviation of this range, targeting higher levels. Now when we take those standard deviation levels, we can see that this -2, -2.5 area seems like a very good area for the price of Chainlink, looking at this reaccumulation range over here. And we can indeed see that after breaking out of that range with the right range model, so the first original breakout turned out to be a fake out, as I've taught you guys. Price went back inside of the range to seek sell side liquidity, provide the reversal structure and the bullish reclaim of the range high once more over here, and afterwards it starts expanding towards the upside in a very aggressive manner, as you guys can see. Now we were not long on just one position, but we could have been long on two positions instead. And this is the power of compounding. So positioning yourself back in the range over here with your first position, waiting for the range reclaim to add a second long position over here, compounding those positions towards the upside. Currently, these trades on Chainlink are still running, and they are running massively. And we can see that over here, the price of Chainlink continued to go higher and higher after the range breakout happened. And right now, as I said, guys, I'm really sorry that I'm giving this hindsight trade recap on Chainlink, because I prefer to give a live example. But as you guys can see, the target hasn't been hit yet. And right now we'll give you guys a live example of a potential range breakdown play that is currently going on the price of Chainlink. question that a lot of you guys probably are asking right now is that why does smart money and the bigger players in this market not just let price break out at the first attempt? Why is price ranging for so long, and why do they need to trap people first, then stop them out, and then let the price break out? Guys, if someone is earning money in this market, there's always someone paying that individual for the money that he is making. So we know that the majority of the market still needs to be wrecked in order for smart money to make money. If they let the price break out without them being filled, it doesn't make any sense. So what do? They engineer liquidity back inside of the range, let the price come back to that liquidity in the range, and then they can use that liquidity to fill their orders. But in order to engineer that liquidity back inside of the range, they first need to trap the majority of the market into thinking that the price is breaking out. Because if they think that, they will open positions and then generate liquidity back inside of the range. Smart money then use that liquidity to fill their own buy orders, if we're talking about a bullish breakout. And then the second way that they use to trap people is because when price falls back inside of the range and the people get stopped out on their long, what do you think they are doing? Indeed, they are either selling or opening up short positions, and then they can use that sell and short position to squeeze those out towards the upside, which will help them to push the price higher after the price is actually going to break out outside of the range. So remember that smart money always needs to trap the majority of the market in order to fill their own buy or sell orders before the actual breakout is happening. This is what most of you guys have been waiting for, a potential live example that is currently real-time playing out on the chart of Chainlink. What we can see is that I'm removing the replay mode, and we can see that Chainlink is trading in a very, very beautiful and clean range right over here, with a range high right there and with our range low right over here. Now we are looking to potentially trade the breakdown of Chainlink. We can see that the price was already breaking down out of this range over here, but once again, as always, as proven, the first breakdown over here is turning out to be a fake out. So a lot of people got trapped into breakdown shorts over here. Now those people need a high to cover their stop loss. And if we move back inside of the range, we can see that the majority of those stops are probably resting above this high right over here. So as per my range breakout and also breakdown model, because in this case it's a bearish example, I'm waiting for Chainlink to get a push above that high, to sweep that internal liquidity once again back inside of the range, and my bias potentially is bearish on Chainlink here. And if your bias is bearish, you can then start looking for those breakdown confirmations. So either we can position ourselves upon a low time frame reversal structure over here to the downside and get into a first short position over here with our invalidation above that high, targeting a potential range breakdown and lower levels. And then the second position can be entered upon the confirmed breakdown out of this range. What do I mean by that? I mean that after taking that liquidity over here, we have to wait for a breakdown once again, a market structure shift, and then we can play the pullback over here, targeting lower levels. Now with this pullback over here, guys, don't wait for the perfect retest of the range low level, because it often gets front run. What you want to make sure of is that you get into a short position over here with your stop above that high, targeting lower levels towards the downside. So, are you going to be the food or are you going to be the hunter? So, are you going to be the food or are you going to be the hunter? The truth is, 99% of the traders will still get caught in the breakout. I'm just trying to make this video to help you guys to understand the difference between a real breakout that you can trade with a high probability to succeed and not to get caught anymore in those breakout trades when they are low probability, because there is a difference in them. But as I said, unfortunately, the majority of the market is still going to get caught in those breakouts. But not the Tribe Capital, because that's the best trading community in the space. And please don't click away just yet, because I have an offer that you can't refuse. 14 days of access to my trading community for just $1.
No way. $1, really?
Max, shut up. I know that you already know that it's $1, but for the people that don't know that we offer this 14-day trial for just $1, all that you guys need to do is follow the first link in the description down below, sign up, and I'll catch you guys there. Ciao, ciao.
So if you're lonely